Market vitals, the levels you need to triage. We're talking triage. Triage the market. Healthy, sick, get out the paddles. It's a Tuesday. Good morning, Matt.
Morning, Bob.
Still morning here, by the way, for all you nooners and 1 o'clockers in the East Coast. MarketVitals.io is the site. Market Vitals is the stream. We talk about risk a lot, Matt, and just want to say that everything is guaranteed probably on our show. The risk is yours.
Own it,
Matt,
live it. If you want to be a trader, own it, live it.
Own it, baby. Own it.
Find your own way. Find your own way.
You know, Matt, we
There
said
are no
we weren't
holy
going to
grails.
talk about it.
There are no holy grails. There are no.
We said we weren't going to
fast
talk
fixes.
about it. We said we weren't going to talk about it. But I just saw the interview with Colin Kaepernick after the Michigan spring game, talking about why an NFL scout should give him a chance, and then they did the.
He realizes his one hit payday on the woke world is done. It's over.
They did a great segue of the piece showing how they measure them just like they used to measure slaves. I mean, let's talk about risk. There was a risk of you making that piece that none of them would want to have anything to do with you. Well, and I said when I saw it, why can't he just go to Canada? They're a little bit more woke.
Well, because he can't make $10 million a year like he can in the NFL. And he thinks
my question is, can he make a CFL team?
Probably not.
All right. Listen, breaking news.
He was at the spring game of Michigan where a walk-on, a preferred walk-on who had leukemia tore up the scene in the first half of the Michigan, spring game last weekend, had 250 yards. And then they had a Colin Kaepernick tryout session for the NFL scouts at halftime. That was the show. That's what it was all about. They had him out there. They had him out there throwing the ball as far as he could for the fans. It was like a circus show.
So
shame on you, Jim Harbaugh. Shame on you.
So, as Paul Harvey would say, that is the rest of the story.
Yep.
Man, I can't share. I want to share, and you still haven't let me share. It's an ongoing battle to be able to share. I'm used to it. I'm one of 11.
Lee's supposed to be the producer here. I don't know what he's doing.
I'm one of 11, so sharing is,
You're patient.
Matt, this is breaking news. Southwest Airlines passenger is arrested for pleasuring himself 4 times and exposing himself to a horrified witness on a flight from Seattle to Phoenix. Man, I thought United was the friendly skies. But apparently...
The best part about the story is he goes, yeah, I saw her taking my picture 4 times. I thought she liked it. I thought she was kinky. I mean, it says it. I can't make this stuff up, Bob. I mean,
the good news is CNN is hiring, and apparently Brian Stetler is being replaced by
this new perv.
Somebody else. Anyway, we like to bring in a little humor here and there, Matt. And speaking of mushrooms, Mike Tyson can't sell his bitten ear-shaped marijuana gummies, Mike's Bites, in Colorado because of a law against selling human-shaped edibles. Like, are they afraid that cannibalism is going to be great again? But
here's the irony of this whole story. And the same day, the Colorado Congress or Senate said you can abort a baby up to 9 months. Who knew?
Gee,
I'm just saying. Which is it?
It's crazy.
No edible parts.
Well, then plant-based gluten says kids have cannibal leanings inherent in them already, apparently, because in 2016 the state prohibited marijuana edibles being shaped like humans, animals, fruit, and or other objects that could attract.
If you make marijuana edibles that are square gummies like they do now, and you put them in a jar, the kid's going to take a whole handful and eat them. He doesn't need an ear bitten part like that. Matter of fact, that he might not eat, but the square ones he's just going to throw down like that.
Yeah, the ear bitten one, he might think his brother or sister had some of it.
Exactly, like, especially if you have 11 brothers and sisters like you'd pass on that one and go to the square one.
Cooties. Well, unless it's a box of chocolate, you know that if it's got a bite out of it, it was no good. You pass on it anyway. All right, Matt, listen, we wanted to talk, or I thought when I saw this and then I saw a tweet about something being down 5%, I thought it was a pot stock. But apparently it wasn't. It was an Airbnb-esque stock. I still can't find it, but that's how we do segues here.
Truly,
Because
truly.
two things, Matt. The bonds are telling a story that we've been telling for a while. And at the end of the day, higher interest costs mean something. I mean, they didn't when they were zero, but when you go from 2 to 3, 3 to 4, 4 to 6, 6 to 8, you know, all this stuff starts to mean something. So let's talk price discovery. Was it Truly? What was it?
Yeah, I think there's a company called Truly. I don't think it's public though, so I can't find it. So I'm gonna leave it.
All right. Anyway, that's our segue.
Well, the segue is important because we've been talking about this, and this morning, let me bring this up for you. The bonds hit a new low on the move, and that's a huge sell-off. They went from 150 just last Thursday. All right. And I said we might go to 152, right? I was looking for that number. We didn't quite get there. And this is why it's hard to trade. You can't always get your high price. You have to sell into the strength sometimes before you get the gain. And I think that's a hard concept for people to understand. But you had to be selling that rally on the bonds. Why were the bonds rallying for 4? Who knows? You know, that was after the equity rally of 18% too. So it was really strange. Now it all comes together because you're like, oh, all this stuff still matters. And we hit 146.07. Is it a double bottom? I don't know. I don't play that game, but in the meantime, you know, the NASDAQ reversed completely yesterday. And I want to get into this a little bit because yesterday was all NASDAQ, not really as much S&P or Russell. And matter of fact, you and I noticed the nuance in the markets this morning that the Russell and the S&P were actually green from the get-go, and the bonds were hanging in there. They weren't at the lows yet. And then once the market opened, the sellers came in strong. So all the hedge funds got the call, whatever it was, they all hit at the same time. But I want to talk a little bit about Twitter, and I want to talk about Twitter because of not from a little different perspective than everybody else is, right? Elon's going to put all the canceled people back on Twitter. Well, maybe, but it won't be tomorrow. He's not the owner of the company. He owns 9.5%. What's interesting is this company came public almost a decade ago, and this is the price it came public at. It came public at $50 basically. And Bob, it is now trading at 51.44, and it is 9 years later. So you do the math.
And has it ever paid a dividend?
It's never paid a dividend. It's never paid a dividend.
So you got a decade of Stugats.
So you got shareholders that are proud to be Twitter shareholders, and unless you bought it in the dull, you know, think about it. They got rid of the greatest thing they had going, which was Trump. At the end, as it started to rally, and then it took off. Well, you know, now it was coming back to you better let free speech happen, or this thing's going to zero. That's where it was. And I think that's the story. So, but you're still not out of the woods. If you're a technical trader, you got to get above this green line right here, and really above this one to really be off to the races. So, Elon's been added to the board. That's going to take time.
You know, I thought it was interesting how
welcome to corporate governance. I think this is actually, you know, a sell up to $60 right now until you can close over 60 on a weekly, and then you can close over, say, 72 on a weekly. Then
and also, Matt, obviously the nuances as we move through time and the incredible importance of time, especially with that trend line, because the farther you go, let's call that west, the farther you go west on that chart, the easier it is to overtake that line.
That's correct.
And so you're right. This isn't going to change overnight, but people have been leaving the platform. I saw other stuff where people were like, you know, I was incredibly successful at Twitter from a business perspective, selling courses, selling my book, and I've been shadow banned because of some of the, I mean, unbelievable. Why would you advertise on a platform? And that's their model is a revenue model based on advertising.
Right.
So
it is. Yeah, and whereas it could be a lot more, and somebody like Elon, who's open to free speech, and you know, could definitely make it a much more intriguing platform again. So again, we'll see what happens. We'll see, you know, how corporate governance works at Twitter. It's still a small company, although it's worth 40 billion. There's a lot of things that could be done here that could be positive. There's a lot of things that he may not understand, although he's brilliant. There's a lot, you know, but he does understand programming. So He understands a lot about the business, more than 99% of the people in the world. If somebody was, and he's a great business person. So, and he gets people. That's one thing I'll say about the guy is like, you go back and look at some of the stuff he said in late 21 that is actually happening right now. And nobody wanted to hear it then, when he was on Rogan and when he was on the Babylon Bee. Go back and look at the Babylon Bee show in November of 21. Go watch that interview with Elon again. He's been spot on what will happen, and it has happened. So just keep that in mind. Now we can transition into, renting your house if you want to do that.
Yeah, absolutely, Matt. Absolutely.
Now that we've touched on the interest rates, let's start with Airbnb. And again, I'm going to look at some longer term charts if you don't mind. Airbnb hasn't been around that long. So again, we don't have a lot to go on here, Bob. But you can see we've had a couple rallies. We peaked up here at 219 right up, when it came public last February. So it's only been public about a year and change. When did it come? It was December of 20. So there is just enough room there. And then take a look at, if we can get a bounce here up to, which we did 181, that sold off down here. And now we're back to that level again. We just hit this morning, we hit 179, which was a high in the move, and it's fully reversed. This is a harsh reversal. So I'll just bring this up. Today might be the day because we've taken out a week's worth of lows, right? That's significant. That's a change in course. We probably have to get to this gap that hasn't been filled, which was 168. I was selling Airbnb all last week based upon, hey, interest rates got to go higher. This is going to affect this. Why is this company running? People aren't going to be taking $300 a night rental hotel room vacations. So why wouldn't I sell that with the fundamental backdrop of the technical? On the same side, you've got Zillow, Bob, and Zillow. I was looking at this one this morning before, and just looking at the slide that this had on the right side. It hit a peak of $208 last February, and in a year, it's gone down $150. So let's call it 75%. If you're good at math, that's a huge sell-off. That's fully right-sided. And it looks like it wants to trade to this 34 level. And again, that's still almost 30, 60%. What is it? 50, it's another 35% off from here. So, and that's a comfortable price. That's a price that people have been paying for years and years. Why wouldn't we, in a higher interest rate environment where interest rates aren't going negative like they were a year ago? Like that train has long left the building. And it's so interesting talking to people that are in real estate and think that this game's going to keep going. They don't understand, like, man, you don't understand basic finance if you can't take a look at what the bonds are going to do to this business model. For that business model to continue, you have to have bonds continually going to the sky. Guess what? This was March of 20. This is the next year. This is February of 21. We're way below those prices at 171 when Zoom was peaking. When Zoom was peaking, you were still at 1.5 interest rates, right? Well, now guess what? You're up to a 5%. If you're a regular normie going to the bank to get a loan, 5%, 20% down, and the 500,000 that we've explained before that you could afford is now 380. Well, how's the Zoom model make sense if houses aren't selling, if they're just starting to pile up and the inventory is going? You need to have, sales for that model to work the way data is sold. And that's what that is what Zillow is basically just a, aggregator of data, right? They're trying to be everything for, get rid of the salesperson kind of model. Who knows how that works? Again, that's a legacy system that's not going to go away tomorrow. You got all these realtors running around getting rich again. You need to get rid of them when we go from 1 million, 2 million realtors in this country down to like 100,000. That's when you need to do it. So the next recession is when a company like this should benefit. So tighten their purses. Maybe they have a chance. And it's only worth 13 billion today. So think about that. It was worth 4x where it was today. Imagine that, 52 billion down to 13 billion. That's a lot of wealth that has been wiped away, my friend. A lot of wealth.
All right, Matt.
And if you don't think that's coming in regular retail real estate, you're a fool.
Exactly. How many times do we have to show it? I mean, we showed it couple of weeks ago, right? The Mag Mile in Chicago, that building,
Well, I mean, driving
Phrase
around
that-
Bend, I was driving around Bend, and all the big buildings around here, big for Bend, like 5, 6 stories that are commercial. They're empty. There's signs everywhere. Please come rent from us.
Right.
Right, because nobody's going back to work. Guess what? This is the backside of that 2-year dark period of shutting people down. Well, they don't want it. People don't like. You and I may have like a little bit more gumption than most. Most people don't really want to leave their house. They don't. I've learned this over time, and I can't live that way. But I'm the outlier. I'm the outlier.
Are you just figuring that out?
I am. In the last few years, I'm like, wow, people they like staying home. I'm like,
man, people also, I love this. You just hate it when things just turn out as a cartoon caption. The wolf sign saying, "I'm going to eat you," and all the sheep saying, "I voted for him because I can't stand Trump." That one, let's just, and I don't know where this other one came from. So I can't. I can guarantee probably this. I don't know how long ago.
I sent it to you. Yeah, I don't know what it was.
Megyn Kelly just asked Julian Assange, "Why doesn't WikiLeaks report dirt on Trump?" And Assange replied, "There isn't any." I mean, maybe he's been unethical in some of his business dealings, but it has not stood up in court so far.
Right.
Oh man, don't you hate it when you're right? And then this, because I want to stick on a sarcastic tone. And this is what I hate about media and narratives. The World Economic Forum saying Venus was once Earth-like, but climate change made it uninhabitable. As if, amazingly, they didn't put man-made climate change, because that's basically what the nuance here is. Why are you busting my balls, Hans? Right? Breaking news. And my thought is, somebody else was looking for a conspiracy theory that would actually hold ground. And I was saying to Jimmy Uriel, it was middle-aged white men that did that to Venus. Let's just make that clear, Jim. Take responsibility. You're a middle-aged white man. You caused Venus to be uninhabitable. It's clear. The science is settled, Matt.
Yeah. It's Trump and all average white men banned.
Average white man banned. Now there's another one that we need to run with. That, along with the pissing ketones, I think we could do a twofer. All right, listen, there's climate change on Venus, but there's also grains being grown here. Let's look at the corn or the wheat, your grain du jour here. And because we got a little bounce. And I got to tell you, since it's sold off on my Twitter sphere, there's a giant debate going on between actual farmers on, if you missed the last time to hedge, like, why wouldn't you be selling this next bump? Because, I mean, this is real dollars and cents for them. I mean, they were.
Yeah, and this is, and wouldn't you also say, Bob, that we're in the pure speculation period of the grains, right? Like, as you keep saying, like that some have planted in some parts of the world, the rest are just getting in there, right? So I think that's important. Like, now you're going to get into the regular growing season and the price action that comes from what's happening with weather and all these things. Corn right now has, as you said, had a huge rally back up to 762, up 12 points here. Buck 1.6%, 783 was the high. Yeah, again, we've been basing up here for a good 5-6 weeks now. March, basically the beginning of March is when we climbed up into this area, and we continue to hold 7. So we're in this 10% range the last 6 weeks. The next 10% will come, bust out, bust down. You decide which way we're going to go.
Yeah, again, too, like if you have fields planted, they're planting in the south already, not so much in the north.
Right.
But I mean, this is your livelihood. Like, you cannot risk.
Why wouldn't you lock in prices that were double where they were a year ago?
Exactly. I mean, for sure, some of your inputs are higher. Fertilizer's higher, gas is higher. And so that you need to capture more.
Or you could say, here's where we were a year ago. This is May 7th, last year, 734. This was before. Guess what? We're kind of back to the same area. Why wouldn't you lock it in? So you can sell it when you're coming to market in August. Look at that. Oh, imagine that. Everybody wanted to sell at 498. They could have sold it here at 734. we're kind of in that same situation again. Now, I don't know. I don't understand the cycles, and I don't trade the cycles of ag, so I'm not even going to say anything about it. I don't know if that's normal, but why wouldn't you lock in higher prices? Even if it goes to 10, it's double that what you would have, it's 60, 80, 60% more than you would have got last harvest. That's, I don't know about you, but I think most farmers would take a 60% increase in their salary.
Absolutely. Absolutely. Right. And the flip side of that is the risk there. You can see the risk. It's clear and present.
Clear and present danger. Clear and present danger again.
Clear and present danger happening.
Yeah. So the other thing, the 10-year, we didn't kind of finish on that, but I'm going to finish on it real quick. I talked about it earlier, and it went to a new high on this move. So let's talk about that a little bit. We talked about the bonds, but I didn't get back to the 10-year. The 10-year TNX hit a new high here of 250. What was it? 256, 7. Yeah. 256, almost 257. So let's just put it right there. Now, when we look at a daily chart, that is awfully parabolic. I mean, you just think about this move, Bob. This move just from here, from February of this year, when we were testing the high that we had made here, right? This is a perfect test too. You got the test. You got the test of this high after going to a new high, pulled back from 2 down to 1.7, and wham, 250. You don't think they're going to go run it to this at least 3.25? Fuck yeah, they're going there. They're going there. You can't stop this right now. Matter of fact, the interest rates should already be higher. The only thing that can stop this rampant inflation, and what did they say in Europe? They're admitting to almost 8% in Euroland right now. 8, Bob. That's what they're admitting to.
Well, you saw the news headline of the German grocer that was raising 30
to 50%. Aldi. Yeah.
Right.
Monday. That was yesterday. Welcome to that. You saw the rioting that was going on this morning in where was it? Well, Sri Lanka is going off. Pakistan obviously is overthrowing their government. And what was the other one? Peru. Okay, so South America. Peru is the small country down there. We're not talking Brazil. We're not talking Argentina. We're talking little Peru that doesn't really do much. Maybe some ag products, right? It's the poor people of South America. And they are rioting because they don't even tell you why they're rioting. They don't tell the truth. You know why? They don't have food. There's no food in the stores, and they can't afford what is there. It's as simple as that. It's coming down to eating, Bob. And how many days until anarchy?
12, no. Depends on the person.
Right.
12 meals, 9 meals.
Like fat people like me, I could go maybe a week.
21 meals to anarchy, brought to you by Matt Davio.
I would be really angsty, but I don't know. I don't know if I'd be as angsty as the guy in the Southwest Airlines. Let's just put it that way.
Right on. All right, Matt, congratulations to those Kansas Jayhawks. What a game last night, as it was. I mean, the biggest comeback since Loyola Chicago, 1963. They were down 15.
They were down 16. They were down 16.
They set the record.
Yeah.
Just incredible.
15 I thought at half. 15 at half, 16. I didn't think there was a way they were coming back. I still won my bet because I ended up taking UNC in that first run. I got them for 7 points. I'm like, fuck, I'll take 7 points. They're only down 9 in the first 4 minutes. I'll take that bet all day. So that was my in-game bet. It was the only bet I took. I took UNC plus 9, and obviously they lost by 3. And again, if Leakey and Love could have shot 20%, they would have won. I mean, they couldn't.
That's crazy.
Those two.
Crazy how cold he won.
And then you got to give the tip of the hat to the big man who was hurt. I mean, you could see he wasn't faking it. I mean,
God, I couldn't watch that.
That first 5 minutes, I was like, oh. Then after Jim Nantz pointed it out, I was like, oh, that was a bad bet. Oh, but then they went on that run. I was like, oh, it was a good bet. And then at the end, I'm like, oh, it's a bad bet.
It was a crazy game.
It was.
I mean, it was crazy how back and forth that was.
Yeah.
All right, listen. So, I got
Tiger confirmed. Tiger confirmed today. I probably might play.
Guaranteed, probably. Just we could have him on a show. He could be a Market Vitals, contributor. Everything guaranteed, probably.
That's right.
That's our motto. We stick with it. All right, Matt, you have a great day.
Oh.
Thursday tea time, 10:34.
Lee's all over.
Pacific Standard, Central Standard, Eastern Standard, Eastern. It's got to be Eastern.
Got to be Eastern because they play in the East. So
Eastern
7:30,
Standard
7:30 Pacific, 7:34 Pacific. Tigger tees off.
Dude, how about the gallery for his practice round?
Was it big?
It was ridiculous.
When do they? Don't they do the? Isn't the par 3 today?
Yeah, and I guess that jinx is real. If you win the par 3, you have no chance of winning the tournament.
You're zoomed. By the way, the 10-year rates in May of 2007. Think about this. I got to come back and just talk about this a little bit. May of 2007, the 10-year rates were about 5 1/3. Okay, that was pretty much the high of the decade. That decade. Okay, so why wouldn't we go back every 10 years and kind of get to that number again? I understand we've been going down for 45 years, but that, the move.
I don't know why I'm laughing, but it seems
think
that
about
money
this.
should just be free and there should be no consequences.
Well, that's what people think, and they think that they're brilliant when it comes to real estate investing. Don't let this downward sloping trend lull you to sleep into thinking you're brilliant in real estate. This is the only reason any of you have made money, and you've been lucky. You should have gone to zero the last time in 08 and 9. They did not. They played the too big to fail. And I guess people are still betting, Bob, that they're going to continue to play too big to fail. But at some point, market mechanisms come into play regardless of what the FOMC does. The only thing that can stop this rampant inflation, and I'll end with this, is raising interest rates. Yeah, it'll cause a recession, but guess what? A recession is worse than rampant inflation. I can assure you that.
Better than rampant inflation.
No, it is way better. Rampant inflation.
You said worse. I agree.
Rampant inflation will lead this country to what is happening in Peru, Sri Lanka, everywhere in Europe. If you can't see that, please write your congressman, tell them to raise the freaking interest rates. It's the best thing that can happen. Yeah, it's going to be painful for the next year or two. Recessions are painful, but that's what normalizes things. That's how price gets back to normal. Then you can expand from normalization.
Right on.
All
right, Matt, thank you so much. Please join us at marketvitals.io. Please share, retweet, plagiarize the broadcast far and wide. Thank you, Lee. And we'll be back tomorrow. Please join us, marketvitals.io. Thank you, Matt.
Thanks, Bobby. Pleasure as always.